right, well, welcome back to Women's Splain. Brooke with Sola, where we examine new trends shaping our future. And today we're going to talk about the venture capital landscape.
Yeah, we will talk about some rising trends, new funds, what makes a good founder, new investments, and, everything in the industry.
Yeah, absolutely. And just kind of diving right in. I think right now, the venture capital landscape is kind of recovering off the biggest boom ever post 2020 and 2021, and kind of experiencing an odd landscape given, there's still so much dry powder in the industry. Just for venture capital, there's over $580 billion of dry powder. A lot of funds are having deployment issues, but there's still a ton of new and emerging funds kind of coming onto the scene, while there's also a lot of funds that are sunsetting that are maybe having issues raising their first or second fund or avoiding raising another fund. And we're kind of in this odd area of like tons of dry capital, tons of dry powder, lots of new and emerging funds, and also sunsetting funds that have sort of failed. And we're in a really kind of weird point.
And I think it's just like taking a step back, like looking at a couple of years ago, I feel like venture is relatively a new industry compared to other finance industries. Absolutely. And I feel like there was so much work going on behind the scenes like maybe 10 years ago, and then a ton of investments in the last 5 years or so, and then we kind of saw that stop right during COVID, and now it's picking up again.
Yeah, definitely. I would say it is a little bit like the market is having a little bit of a better vibe now. I mean, I think interest rates are, not at least are, being cut slightly. Yeah. I think there's like some more positive outlooks generally happening. But I think just the general industry of like early stage, seed stage investing is being really questioned, especially sort of outside of these more traditional like venture areas where really like venture started really in the tech boom. And like the really early kind of venture wins were technology, and it was like, Facebook and Google and like, et cetera. And then all of a sudden, basically every company under the sun was raising venture capital, from consumer, obviously to more, technology to hard technology to everything, and deep tech. And it was like, and even celebrities were raising, money from venture funds and starting their own. So I think that's pretty interesting. And now I think I see venture capital sort of maybe retreating to its roots, where areas of like, I think like business models are just easier and more predictable, which is interesting.
I would love to get your thoughts on this, because I feel like I was really interested in venture in college, and then when it was super hot and sexy, and I feel like everyone went into venture or became founders, and was really easy to raise money. Totally. And then now I kind of feel like it's been overdone, and so a lot of people are skeptical about investing in early stage, specifically that doesn't have a tech lens. So even like with consumer, I know like everything has to be like consumer tech. AI is hot right now. Everything needs to have some sort of AI angle. So there's no more D2C brands really raising raising money. So, I mean, do you think that this is just a big bubble? Do you think it's going to continue? What are your thoughts?
Yeah, I mean, look, I think the bubble burst a little bit where venture money was so easy to come by. And I think also venture managers had a really different attitude than they did. I think like obviously like in venture capital, you expect like 9 out of 10 of your companies to fail, but you also do expect like a lot of boom. And so I think there's just, and the answer is like when it comes to super early stage or seed or pre-seed or pre-revenue, it's like, how do you pick a winner? And the only way to do it is often like those who are like super, super expert in something, or super thesis driven, or like whatever it is.
Or like basically the founding team.
Or basically the founding team, or actually brand new and there are no competitors, or way ahead of a competitor in like an emerging trend. So it's like, it's just hard to really anticipate. But now I think a lot of venture funds really have crashed and burned, even big ones. With like a lot of issues with investments. Obviously we've seen that with like Sequoia, we've seen that with like a lot of other funds. And so I think like it's a bubble? I think honestly just the investment strategy like really needed to shift, and people had to be more diligent, which is really hard in early stage. And the answer is like it's a lot easier to be diligent in company that's later.
Right.
But this sort of like invest in everything like strategy seems like it's not necessarily working, and hoping one will win, because it's like not necessarily covering our losses.
Yeah. And I think a lot of funds were doing that. They were like, technology.
Yeah.
Okay, but what about it?
Every single thing. Yeah. Like I feel like Soma Capital is like one of those. Like they have, I mean, like their founders like a big deal, and like they've done like well, and like they're just like investing straight up every single thing under the sun, and like that's their entire strategy. And like they're all, I mean, like their founders still on the Midas list and whatever, but like I don't think that's sustainable in order to continue. And I also think obviously there are less and less founders wanting venture money, mostly because obviously it's dilutive, it's harder to come by, and like debt is so difficult now, and like venture debt obviously with like SVB and everything crashing, like it's just not existent. Like ARR loans don't exist anymore pretty much. And so like that type of strategy has shifted, and I think founders have shifted like their strategy, where maybe they're kind of going back to sort of pre-venture boom of saying like, look, like until I have a certain amount of revenue, I'm not going to raise money. Like I will do this bootstrapped, I'll do it through angel investors, which I think like angel investors are honestly a really good like secondary way to do things. Or even like if you're not in an industry that's like wouldn't take a bank loan, like I feel like they're like cannabis and like crypto, like a traditional bank will give you credit. But like if you're in an industry that like can get like just your traditional like line of credit for a while, it's harder, but it's probably a better way to go.
Yeah, I have seen that a lot. I feel like like a few years ago, people were like, I'm just going to raise if I went to a good school, have a good background, you know, like you and I could raise probably.
Oh, yeah,
3
100%.
mil.
Honestly, yeah.
Probably not tomorrow.
Not tomorrow.
Definitely lots of due diligence.
2021, we totally cut off.
Right.
I mean, they were giving everyone, I mean, it was just like a crazy economy, and they were pumping so much money into it. And also like I just like too at that point it was like the peak of like dry powder. I just remember being in growth at the time, even late stage growth. Like I will never see a more competitive market in my life. Like even like FTV or like the firm that I was at, like super conservative investor, late stage growth investor. I mean, with like initial sort of VC-ish roots, we're paying crazy multiples for companies that like were, you know, which was just so hard to get a deal. So hard to get a deal done. And now it's like there is like issues with deployment, but it's more the other way where people are being super picky. So it's kind of like a weird overcorrection. And you know, there are a lot of these, like I think a lot of it too is like there's these huge trends that crashed. Like metaverse was a big one.
Oh my god!
Like do you remember when everything was metaverse?
I remember.
Everyone was metaverse.
That was like what, 2?
That was like a year or two ago. 2 years ago. Honestly, everyone and their mom was metaverse.
I really did not like that trend at all. Even like crypto, right? Like even still.
And like, yeah.
And like, I knew it was fleeting.
Super
like,
fleeting.
That's a bubble.
I know, exactly. And like, that was crazy. And I remember like everyone was creating like whatever, like VR metaverse companies, like everyone. I remember
even like big companies, like I know like consulting firms, like McKinsey, Bain, BCG, like they were spending a ton of money
on it. And like, I mean, and like obviously Meta is still recovering from the amount of money they've lost in investing in a metaverse, which is crazy. And like every consumer company was creating their own. Like tons of celebrities are trying to raise money for it. Like I remember I went to like an venture event hosted by like Julia Hart. And her I don't think they did it because they ended up doing like a shapewear brand, but they originally were gonna do a shapewear brand that included this like metaverse component that could like shape to your body. But like the answer is like people just like don't care enough. Like, and I think like looking there's no way to really know that until you do it, right? And like everyone is skeptical of brand new ideas. And like look, I mean, it seems like AI is not gonna burst, but like maybe it will. Right. We don't know, or maybe it'll be different than we anticipate. So it's like these bubbles like just happen because there are these crazy hot trends in venture. Which like everyone's talking about, and sometimes they turn out and sometimes they don't.
Well, I think with AI, I feel like there's a practical application. Like you're seeing the impact of using AI, using machine learning on these old industries versus I feel like metaverse was like this whole brand new industry.
That's true.
Like required another layer of, you know, downloading things and like learning about it.
Totally. So. No, it's true. That's a great point. It's a great point. And like, I think the only question around AI is like, look, I don't know enough about it. I'm not an engineer, but like, will the technology catch up? And like, how long will it take for like, because obviously AI is incredible. Like I use ChatGPT like all the time. It's awesome. But like, there obviously are limitations. There's so many applications for automation from everything, you know, from like healthcare to banking to anything. But like, I think there are obviously just like, there are holes in the technology right now, and I'm sure it's going to develop, but it might take longer than we think. So we're going to see like, does venture kind of catch up to that? And like also like, are the initial kind of starting players, like are they going to be overtaken by these specialty players that are going to be able to apply to everything? Like I don't know, like that old saying that's like the only way to make money in this industry is to be first, be smarter, or cheat, like, or whatever. Yeah, and you're like, it's easier to be first, right? Yeah. So I don't know, we'll see. But like, no, obviously, like that will probably like change our world the most. So it's I don't know, it's interesting.
Yeah, I mean, let's talk about a couple of venture funds.
Yeah, absolutely.
I know you worked in the industry and you're very familiar, and I feel like we talked a little bit about new founders that are minority or female, and like lots of funds that are specifically investing in a type of founder, as well as a type of strategy and investment.
Yeah, totally.
So what are some of your favorites that you've been following?
Yeah, for sure. I mean, I think there's continued of this trend of like just new and emerging founders. A lot of them are, and the great upside of that is a lot of them are more diverse. Currently only like 1.4% of assets in the general investing industry are controlled by women or people of color, which is crazy. Yeah. But about 16% of new and emerging founders are diverse and women. So that's awesome.
And in terms of funding, was it like 80% of funding?
Yeah, I mean, yeah, exactly. Probably. I think it's
for
women founders, all female founding teams only get 2%.
Yeah. Okay.
And then like mixed, I think it's like 20%.
Yeah.
Yeah. Something like that. So it is pretty crazy. But like there has been a lot of like really exciting new and emerging founders. Like one, I think that's been in the news laws called Coalesce Capital, founded by Stephanie Graveda. She was like a Warburg alum. And she, went out with a $750 million sort of goal. It was completely oversubscribed, 900. So, wow. And she just did a pretty exciting deal in the biotech industry. So she's doing great. That's super exciting.
And her fund is focused on like deep tech and very
like
specific
stuff. Yeah. And I think that's great. And like I think she's an expert in that, like life sciences, biotech, deep tech. That's awesome. Like that's what she's focusing on, like business services there. So I think that's obviously like a really good strategy to go for. And there are like other sort of emerging technology funds too, and other like female founded funds. Yeah. One is like BBG. And they were originally, I mean, they're not new, but when they're like earlier stage than that. They're like seed to probably Series A or something. Originally focused on only female founders. I think they've now expanded to female and people of color. So that's interesting. So that's good. Just lack of deal flow there. They've done a lot in the healthcare space. They've done well.
Female Founders Fund, of
obviously
course.
Awesome.
I feel like that was like also one of the OGs.
Oh yeah, absolutely, which is great.
Yeah.
And so and like there's obviously other like just with like Forerunner Ventures too. I know you're familiar with them.
Yeah, and that's founded by Kirsten Green. She's been a trailblazer in the industry, I believe. Yeah. And like they're also a fund that focused only on consumer. And I feel like a lot of the times people are like, I'm doing deep tech, I'm doing healthcare, which might seem a bit sexier from an investment standpoint, but they were only focused on consumer tech, and they did really, really well. Like they did Jet.com. Yeah. They did Billy, I believe, like the Razor Ritual. I think that's also another one they did.
Awesome.
Also female founder there.
Oh, very
and they're
cool.
doing really well now.
Yeah, I take Ritual. They're great.
Yeah, I love Ritual.
Yeah, they're great. Honestly, I feel like I'm like super bad at taking vitamins, but I did taking Ritual actually really does help.
And it's very pretty.
It is super pretty.
All in one.
Yeah.
I actually found out about that like on a podcast, and then I started using it like 3-4 years ago.
Oh really? Yeah. No, I mean they're great. Honestly, I feel like they've probably made women like way healthier. I don't know. I don't know. Their stats are probably awesome. Yeah. But no, I agree. I think like honestly being just like the industry focus is like really important, and I think that's also good to be like a balance of founder operator experience and like investor experience, because it is so different. Yeah. Like I went to this event like recently, like hosted by John Gannon. And it was like John Gannon was like a partner from NEA, a partner from like ENIAC.
He has that newsletter.
Yeah, I read it all the time.
Yeah, every day.
Yeah, I read it like every day. It's awesome. He's great. I freaking love him. ENIAC, a partner from like Brooklyn Ridge, a partner from another fund. And it was interesting because the partner from ENIAC was like, he was the former founder. Their whole team was former founders. And he was like, yeah, like I think I realized, and it was so funny. Because I think they're on their fourth fund, I believe. He was like, yeah, our returns of like our third or fourth fund were so much better than our first and second, because we just realized like founders have no patience. We can't build a memo for our lives. Like we hate diligence. And I was like, yeah, like honestly, that's so fair. And he's like, and I thought it was totally different. And I think that you need like that balance of like super financial like attitude of like really, and then people who have like obviously operating experience, because like both those are super different. Right. And I think you need like a balance of that in all honesty. And like I think a lot of times like the best investors have both. Yeah. have done both, a lot, but it's important to have a balance of the team at least.
And what about founders? Like, do you
Yeah.
think it's beneficial for them to have some sort of investment experience before they start something? Like, what have you kind of seen?
I mean, it certainly doesn't hurt because in all honesty, I think founders can be like investors can be predatory.
Yeah.
And like obviously we like use just like financial complication to our advantage, right? Like so I think especially when in terms of like structure, I think like structure can be super predatory. And so it's obviously like it certainly doesn't hurt you.
Yeah.
But also the answer is like no. Especially if you're like super early stage or like a technological and the answer is most of the time founders get replaced at a certain point. Like 80% of companies kind of get like 80% of growth stage companies, the CEOs get replaced. And the answer is a lot of the times it's very mutual because founders don't like being CEOs. Like it's a totally different thing. Yeah. Like
they want
to build a company from the ground up and they don't want to like be just like being a CEO of a big company is totally different.
Yeah.
And like most of the time CEOs are brought in, like that's their job. Like they are literally serial executives and they get brought in at 10 million of revenue and they go from 10 to 100, 10 to like above PE back. Also like dealing with like PE investors like sucks a lot. Like honestly, like they're totally like, I mean, that's really like hard. And it's like, it's a different thing.
And this is where the search fund craze comes
search
in,
fund
right?
craze comes in. Like, and the search fund I feel like is focused on like lifestyle businesses or quote unquote, which are more like people who are like family businesses, like didn't take venture capital, right? Versus like VC, like high growth companies. But like maybe we'll see more of these kind of VC funded, like go that way. And like, I think like for sure, like the whole trend of like, I don't know, what is it called? Like unicorn versus camel, whatever they say. Yeah. Which is like true. Which I actually another female founded one I forgot about was like Cowboy Ventures.
Oh yeah,
they're great. Robin.
Right?
Yeah, she's really cool. They've done a lot. I feel like they're
pretty new.
Tech. They're new.
Yeah,
they're like fintech. I feel like and fintech and like B2B SaaS, but they've done really well. And I feel like I've seen a lot about them. They're super impressive too.
And I guess Harlem Capital as well, like focusing on minority founders and they're Brooklyn or Harlem based
for sure, which is awesome.
Yeah.
And there's also been like I feel like a lot of new funds. There's definitely been a trend of like investors spinning out of larger funds. Like Left Lane, I feel like is the big one. Like it was spun out of Insight. Obviously, like Tiger Cubs everywhere. Yeah. And then there's also like I think Rex Woodbury. Yeah. I think is it Daybreak? I think it's called Daybreak or something. But he spun out of Index. And he does consumer.
He does a ton of consumer.
He's like, I like love his newsletter.
I love his newsletter too.
Yeah.
It's so easy to understand.
Like also like his freaking Taylor Swift one was like
honestly
he also writes
iconic. Like a Gen Z. It's like
he
great.
Does. It
so
is
digestible.
Great. Rex, if you want to come on the show,
please. I also saw him walking down the street in Chelsea one day. And I was like, oh my gosh, that's Rex. My friend's like, who? And I'm like, oh, this is
You're like, it's a VC celebrity.
Like, what the hell? But great fashion.
He's awesome. No, for sure. Which is great. So I think that's really cool. And there's been others that spun out of large funds, which I think is good too. And like it's like a good strategy, honestly, for people who want to start their own fund.
Yeah. It seems like it's pretty saturated in terms of if anyone wants to start a new fund, of course they need to have the background and capital, but it's doable. So what do you think really differentiates like a fund for early stage specifically?
Yeah. I mean, I think it's such a hard question because I mean, there are so many new and emerging managers right now. Even though it like on average, I think I read like, newer, like smaller funds have better returns. But that's mostly because like it's easier to get a return on a smaller amount of money. But I think the hardest thing is just like in attracting LPs in all honesty and maintaining them, which we've also seen a lot of new funds fail recently. Like there are a lot of funds that are like on their first or second fund right now that are like sunsetting. So I think the way to, I guess, differentiate yourself is if you're able to, I think, one, like focus on a really specific sector. I think if you've had success in the past being like an independent sponsor or being like obviously like really tangible like ROI your previous fund. It's hard though because like that information like attributed to you is also private. So you can't like really like commercialize it. But if you're able to use your like own investments at a previous fund or your own independent investments to be like, look, I have done this, especially in a really specific sector, I think that's probably a good way to do it.
Yeah.
I think obviously being like a previous founder is good. I mean, I think of, or like being,
or like having some operational
experience. And then it's all about like, I feel like being able to entice LPs to take a chance on you, because it's hard.
It's a people's business.
It's like whatever. I mean, I think of like, you know, there's so many different like Tusk Ventures, like their
Tusk.
thing is like,
they did a lot of like out of the box investments.
Yeah, because they do like everything that's like government regulated or whatever, because of like probably just
like they started doing cannabis I think they were one of the first ones doing
which is cool. Like they did drone investment, they did gov tech, they've done a lot in health tech.
Yeah,
like everything they think they can like deregulate. But he like partnered up with a Blackstone guy, so it's like yes, he's not an investor, but like he he's like pretty much just like a lobbyist, I would say. Like and then obviously Uber is how he became rich.
Right.
But like it's interesting, and then he also does now he's doing a lot within like the abortion pill space, which is like very cool. And I think he has like a charity for that too.
Okay.
I also read an article that said like he bought a bookstore for like his children.
Just a bookstore,
he just like owns a bookstore for funsies. Like I don't really know.
That's so funny.
It was like so cool, I guess. But like yeah, so like that's cool. Like maybe he's I don't know if like you can invest in bookstores. Maybe that's.
I mean, we gotta look at the multiples.
Probably real cheap.
Yeah,
real cheap.
Sure.
You know, I mean, I have no idea, but yeah. So it's interesting. But I mean, I've always thought so. Like I don't know, maybe one day. But
you're gonna buy a bookstore one day.
Yeah, I mean, I used to read a lot as a child. I feel like that was
too.
Like so much as a child.
Right.
I loved it. I feel like that was like a good. I got my parents to just let me buy whatever, but it was also that they would be like, oh, go to Borders and like wander around and buy whatever you want.
I used to love Borders or Books a Million.
Yeah,
I used to love that place.
Barnes and Noble. They're freaking awesome.
Yeah.
I would just like wander around and buy whatever books I wanted. My parents would like not look because they were like, it's books, like great.
Right.
And I read books that were so racy for my age. Like Gossip Girl. I read the Gossip Girl books when I was like honestly 8.
Oh my god.
Those books are freaking racy. Okay, I learned a lot of stuff in there. Like I was like, what is going on? I didn't even know what half the stuff was until I was older.
Yeah. Like Pretty Little Liars.
Like honestly, Click was really.
Oh my gosh, I loved Click. Oh my gosh, the best.
Oh my god, yeah. Like Aragon, all those books. Such a little nerd.
Yeah.
But I think there obviously just generally there's been some really exciting new and emerging funds. Would love to see where it goes. Yeah. And super excited for kind of these newer and diverse founders, and you know, would love to see kind of the next trend. I mean, we'll see. I mean, like I feel like crypto is a trend that kind of busted. Metaverse, I think there'll be some. I think maybe AI is the first and the last one.
I think so.
Yeah, because I mean that's.
I'm pretty optimistic about it.
Me too. It's gonna change everything.
Yeah.
So like I don't know. Hopefully we don't end up living in the Matrix. Like, we're already in the Matrix.
Who knows?
I don't know. Red blue pill, blue pill, whatever.
Yeah.
But it's still pretty cool. So yeah.
I guess talking about founders, and you've seen, I'm sure, a bunch. What are some of the characteristics that you look for, or what an investor, would look for?
Yeah, for sure. To be that type of personality, a lot of them, like, they're not normal people. Like, just this is a generalization, but like someone who can like really build a company and build multiple companies. I mean, it's such a hard thing to do, and it's so crazy. And you kind of have to be like a little delusional, to really believe in it. And so like a lot of founders are like kind of nuts, but there are also founders that are also totally stable, so it's kind of interesting. But I think like obviously a lot of it is about reputation, but I really think a lot of it is just being like being deeply involved in every part of your business,
that's key.
and being able to like say like this is every single thing that's going on, and really articulate it as well. And like I think just like making investors trust you, which like is hard thing to do, because obviously there's like a really fine line of like puffery honesty, which we've seen as like kind of a trend generally. But I think just, I don't know, being an expert in what you're doing and why you think you're going to be the best, I think it's just sort of the best thing. And then even though there are definitely like a range of types of people, but the answer too is like it's not as important as you think, because a lot of just founders end up being replaced. So it's just like,
true.
It's really more about like, are you the true expert in this product and in this sector? And do we like trust you in that specific area?
It's not like Elizabeth Holmes.
I don't know. She tricked a lot of people, man.
She did.
She tricked a lot of people. So like, I don't know. I mean, obviously she was defrauding people, but like maybe she was a good founder.
Yeah.
Oof, I don't know, hot
People
take.
did trust her, I think.
People did trust her. She was super smart, I think, in
Yeah.
her own way.
Yeah.
I know she's in prison now. IDK.
I think she's back.
Oh, she's
out.
back.
Yeah.
She's out. Okay.
She's like married to some like heir.
She's
some
married to
hotel
that
heir.
heir. Yeah, who
Yeah.
they like went to Burning Man together and stuff. They have like 2 babies. Crazy.
Yeah.
Yeah, I don't know, man. Craziness. I don't know. Of like Amanda, what's her name? One who's Karen and Me Girls. What's her name? Amanda
Carrie?
Seyfried. Amanda Seyfried.
yeah.
Amanda Seyfried, I guess, plays doing a Hulu special. I don't know.
Yeah.
Maybe
I
you
actually
made it.
watched all of that on TikTok. Like, I
Really?
did not watch it on TV or my laptop, but I watched the entire season, like 3-minute clips, and I'm like, wait.
What?
But it was great.
Would you just like punishing yourself, like watching random
I don't
clips?
know. I would just like, I could have literally gotten up and like put it on to TV, but I don't know. I just did it on my phone. I guess this goes to like another
I don't know. Okay. I mean, I don't know. I mean, that's also like a
generation does now.
Is this what the generation does?
Yeah.
Yeah, I have no idea. I don't know. I like barely watch TikTok, so like I have no idea. I like recently, I literally have no posts and 11 followers. That's like where I am on my TikTok right now. But it is so addicting. It's crazy.
Yeah, it is. I like
So much more
a
addicting than
limit.
Instagram that it's like wild.
Yeah.
Like deeply more addicting than Instagram.
Yeah.
Yeah.
And we talked
dangerous.
about, TikTok before in our other episodes.
Yeah.
So,
Yeah, it's crazy.
but it's very educational.
Very educational. Yeah, I don't know. I think like, I guess wrapping up, I think generally VC landscape at a weird point. I think there's obviously a lot of sense, but I think really like maybe the answer is like the quality funds are going to emerge. Like the real people are really specialists in their own sector. And even though there are certain sectors that become hot and not, like a general area, there will be successful companies, which like I think Forerunner has proven. Like consumers like not as like accepted or like not considered a hot trend, but she's obviously done super well because obviously
even,
there
like,
still will be
D2C.
super successful companies there. And I think a lot of that too is like the reason, I mean, I was thinking consumer is hard because it's the margins are low and like it's a harder business model, but it's also like traditionally a female industry. And so sometimes I'm like, maybe people don't think it's as good as because like it's selling to women, even though women have like all the buying power.
Subconsciously. Yeah.
Subconsciously, a little bias, which is also like, that's like a big theory about why female founders don't get as much funding is because a lot of the time their product is focused on women and like men are like, I wouldn't buy that. So like, why would I invest?
Exactly. I was actually talking to a founder back in the day a few years ago. Her name is Sally. She started this collagen brand called Crush Tonic.
Okay.
I think I probably told you about it. I met her at an event. She was awesome.
Yeah.
She used to work at Stripe and then quit. And then she was at Condé Nast. And then she started her own collagen brand at like age 25.
For her.
And she was talking about like raising money, and she was like, yeah, all the like male investors that I met with were like, oh, I don't know collagen, like I don't really know, like let me ask my wife, or like just wanted to like go get lunch with her just to like spend time with her because she's really hot. And I remember her saying like, yeah, it's just like really hard because collagen's like for everyone, but it's like girly, quote unquote.
Yep.
And so they were like, oh, I don't know, and like I don't want to know, and like maybe you can go talk to a female investor.
Yeah.
So that was her whole journey. She ended up, I think, raising money. But it was definitely bootstrap.
Yeah, no, I think it's true. And like, and I think like women's health is another area too. It's like all of a sudden has had this huge boom, but it's so crazy that
Makes
like
men uncomfortable.
yeah, that it's like, but it's so crazy. It does.
Yeah.
But it's so crazy that it wasn't until like 2021 that women's health was invested in because it's so ridiculous, right? When you're like all of these trends of like fertility, like, I mean, like women just not being focused on in the medical industry, like women actually make up most of the healthcare workers. All these things have been going on for decades, right? And it's like all of a sudden in 2021, there's a huge boom of like billions of dollars being put into women's health. And it's absolutely wild. Like 97% of research money is put into non-women's focused things that are not oncology. Like breast cancer had like a lot, but other than that. And even like the majority of the money that goes into women's health is specifically on fertility. And like that was also a hot sector.
Like
for
spring.
VC, like spring.
Yeah.
For sure. And others, like there's a lot within that. And like egg
pump.
freezing. Yeah. Now there's a lot about like breast pumps now.
Yeah. There's that like the really high tech one. Starts with an E.
Yeah, I know you're talking about. I don't know what it's called.
Yeah.
I definitely want an ad for it. I played all of those targeted ads, right? Yeah. Like I
always
turned
got
like
it.
20 and I was like, all the ads.
Right.
But yeah, it's kind of crazy. Elsie.
Yeah.
Elsie. Good one. Yeah, I know. It's pretty interesting. But I mean, and then I'll like and I mean, like Maven has been obviously super successful. Like Tia's another one.
Tia.
They were great. I went there once. Like honestly, and like now that's like kind of been successful. And there's also like a good like obviously Roe, and then one of the ex-Roe executives also like founded a company called Alara Health too, and like they're doing well. But it's interesting too from a virtual health perspective. Women actually use virtual health way more than men too. Like 65% of virtual health is used by women.
Oh, interesting.
Because women feel like A, like they are more particular about their providers, and B, are like busier, often taking care of children. They have like less free time. A lot more women work from home, and like need more flexibility. And it's just like another space that's been created by men. So I don't know, maybe we should do a women's health episode. But it's another example of just like, yeah, like these areas weren't funded because like men were controlling the money.
Classic. That's why we have this
podcast. Exactly. To break down barriers, invest in more women-founded stuff. So, yeah. Well, I think that kind of wraps up our episode today. But yeah, the VC landscape, let's see where it goes. It's interesting. And you're rooting for the new and, emerging managers. I think kind of the best will win. But thanks so much for listening.
Thank you.